Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group Securities offered by MoneyBlock. We're wrapping up the final Monday of this trading month, March 27th, 2017. And it has been an interesting day to say the least. Now, before we get into the price action, I just want to point out that today's action comes on lower than average volume, both in the New York Stock Exchange as well as the NASDAQ. So that's going to put some context. And the volume is even lower than it was on Friday. And Friday was pretty light as well. So while we've had some volatility in the marketplace, the volume hasn't been there to say that there's conviction on one side of the fence or the other. As we noted in the previous segments, our battle lines are drawn, right? On the Dow Jones finished today down 45, so it bounced off of its worst levels. As a matter of fact, it opened right here around 20,488, finished the day at 20,547. So we had a nice bounce off of that 50-day moving average. That means that the intermediate term bulls in the Dow Jones, they held their ground. They dug their heels in, boom. So we're watching that, but it was on lighter than average volume. So what we're not seeing is either people adding to their current positions or new participants coming in at size. So there's still a relative amount of uncertainty. We're going to watch this very closely. Next point of resistance on the Dow Jones is going to come in at 20,743. Now taking a look at the S&P 500 and the SPX cash, finished down $2.40. It actually pierced on the open its 20-day moving average, opened up at 23.29, subsequently just bounced right back to the upside, finished the day at 23.41.60 off of its best levels. Again, like I said, this is the battleground for both the Dow Jones and the S&P 500. This is where those that are going to be building positions are going to look for opportunities, whether it's to ladder in some short puts, buy some call spreads, maybe buy some underlying stocks and maybe some of the best performers, especially ones that have been beaten up. But this is the area where that conviction has to start kicking in. Otherwise, the bulls could get some traction if we get a break below that 50-day moving average and a close below that 50-day moving average. That's what we're going to watch on these major indices. The NASDAQ really was the shining star. Continues to be the silver lining of the market. Opened up the session at 53.21, finished the day at 53.74. So a nice bounce, and it reclaimed its 20-day moving average. Short-term bulls, they had a little sigh of relief in tech. The Russell 2000, there is a point of conviction here. The bulls are going to have to step up if these domestically centric stocks are going to start moving to the upside. So you're talking regional banks, small businesses. These are the types of institutions that are retail that are going to have to start getting some momentum to the upside. Right now it's trading at 1357.32 up 269. It's trading on its best levels of the day almost. It did reclaim off its opening. It did test the lows at that 1330 mark. So there's still some uncertainty on this domestic names, and that's not unusual. It's not unexpected with the fact that we just don't know what's going to happen in the upcoming months with tax reform, infrastructure plays, as well as trade. So there are a lot of implications as far as the policies going forward. The data, we want to make sure that GDP is continuing to grow. We want to see wage inflation. All of these things are going to start coming in the forefront and really be scrutinized as they should. Volatility came off pretty hard this morning. It got as high as 15. The VIX opened up at 15 and then came down, finished the day at 12.5, down 50 cents or 3.55%. So a pretty significant range. But again, like I said, the battleground has been and will be for me right around that 13.5 level. If we're going to see any sustained volatility, it's going to have to settle above these levels. So right now the fear index is still very low, but you can expect with the policy components still up in the air, the potential for some vol spikes throughout the sessions going forward. Dollar weak. Continue to see the dollar trading down 55 cents at 99.21. That still was not a catalyst for crude oil. Crude oil, light sweet crude, is trading at 47.73, down 41 cents. I am not completely convinced that we're going to get this bounce up to 52 that we're hearing a lot of pundits start talking about. Could we get a bounce? Sure. I think that it's starting to get a decent base down here. But the problem that crude oil has right now at this juncture is there's still a lot of rigs that are coming online here in the United States. That means that we're pumping more oil. Let's watch the inventory reports this week on Wednesday and Thursday for the API and the EIA. Let's watch those very closely. Bigger builds means that it's going to be more difficult for crude oil to start challenging back up into the upside. Finally, taking a look at the bonds. We saw that the bonds held up in spite of this bounce. Yes, the market's opened up weak, but if you take a look at the two-year finished up on the day. You have the 10-year up on the day, finished off of its best level. So the price action started to come off. Yield started to come back up a little bit, but we still have the price action to the upside in bonds. Let's see if that can hold up. I think there's going to be some price pressure in bonds where there might be some profit taking after what's been an impressive move to the upside, but we'll have to watch that very closely. As that's going to potentially start weighing on finance. As a matter of fact, if you take a look at finance as a sector, finished right off of its best levels. It was looking very weak this morning. Finance has been under a lot of pressure. It broke through its 20-day moving average before the market broke, and you saw that back last week. And so right now, resistance is coming in at $24 on XLF, which is the ETF that tracks the finance sector. Watch that level very closely. Right now, it's trading at 23.44 after hours. So there's a lot going on there. Also, what's notable too is take a look at biotech. Biotech was a huge winner today, up 1% or $3 on the IBB. You can see it bounced off of those lows after it pierced through on the opening on the 50-day moving average. Again, like I said, intermediate bulls are picking up and buying the dips on these biotechs, these drug stocks. Finished the day right off of its highs and its resistance level now, the 20-day moving average at 293.57. So it's trading at 293.25 after hours. Let's see if this opens and tries to retrace and retake its 20-day moving average. That could give the short-term bulls a little bit more of a catalyst to the upside. You could see some new traders coming in and potentially trading in IBB going forward, especially if we start seeing some convictions that maybe there's not going to be a cut in drug prices for the foreseeable future, especially since healthcare is off the table. All right, folks, that is it right now for the closing bell. We'll be back tomorrow morning at 8:30 Eastern Time. We're going to be talking about everything from Asia. And I will tell you, we're going to start talking more about Asia and Europe. These are areas that we need, as well as Australia, that you're going to need to look at for potential opportunities, especially if we get into a consolidative or even a downtrend in the U.S. markets. Exposure into those markets is going to be important for your portfolio to have a balanced portfolio. So we'll talk to you then. See you tomorrow morning.